Good afternoon, folks. What I'm going to discuss with you today has a lot of investors talking, and I mean a lot. It's an investment hot topic you may or may not have heard of. Specifically, I'm talking about private markets. The private market sector can be hard to understand. I get it. So we're going to tackle one aspect of it that can be especially confusing. At the end of the video, you're going to know how it works, what it means for your money as an investor. So let's get started. I'm Udayan Mitra, and I've been in the investment world for more than 30 years. I've managed funds for everyone, from billionaire family offices to large institutional investors like pension funds. Now, I'm the co-chief investment officer here at Trajan Wealth, and my focus, as you might have guessed, is on private market investing. I'm going to break down my experience to help you decide if the private markets are a good option to add to your portfolio. We partner with a firm called Overlay Capital for our private market offerings here at Trajan, and they help us create the opportunities we're going to talk about. Today, we're going to discuss our infrastructure credit strategy. It is an important part of the private markets that you need to have knowledge of in order to make the best investment decisions. So what is it? In simple terms, our infrastructure credit strategy means helping developers build, as you might have guessed, infrastructure. Things like power plants, cell towers, and even the roads that you drive on every single day. We do this by working with our partner, Overlay Capital, as I mentioned earlier, on a strategy to help smaller developers get their foot in the door with downstream distributors to make sure they can finish their projects. Let's take an example of a power generation project, like a solar power plant. Say a development firm focused on sustainable energy wants to build a solar plant. They need a lot of things to get going. Things like engineering, real estate, raw materials for construction, and a lot more. Not to mention all the labor they will employ to design and build the plant. As you might imagine, none of this is easy, and all of it costs money. A lot of these costs come a long time before the plant can even produce any electricity to sell to underlying consumers. And that's the problem we are here to solve. Our credit strategy helps these developers pay what are essentially deposits with larger utilities that promise to buy, in this case, electricity once the plant is built. And here's the unique part. The way these investments are structured help ensure that money going into these projects is as protected as they can be. The contracts help ensure that the larger utility, rather than the small developer holding the deposit, is responsible for any funds we invest. That means it's harder for investors to come up short when things don't exactly turn out as planned. We can never predict the future, and there's always the risk of that happening. The larger utilities are required to refund the deposits directly to us if that were to happen. Simply put, folks, by investing in the deposits that go to larger utility companies, the money is less exposed to credit risk, because the large utility has a better ability to absorb any bumps in the road. Thus, the project can proceed, the plant can get built, and the power can start flowing to customers. That all sounds great, but what does that mean for you? You're not the large billionaire investor or large institutional investor, right? If you are, call me. I'm kidding. But that's where the opportunity comes in. We focus our efforts on helping smaller middle market funds get projects done. That gives accredited investors who aren't necessarily billionaires or even multimillionaires more chances to diversify their portfolios. And diversification is something we always recommend here at Trajan. By seeking out smaller projects to help with, we can also invest in opportunities that have the possibility of higher returns. And why do I say that? Smaller projects are less crowded, attracts less capital. Basically, right now, there's not a lot of competition in this space, which can mean better chances to help finance those smaller companies that are having trouble raising capital. And it also means helping diversify your portfolio. Infrastructure is also an important part of all our lives. Investing in projects that take us into the future can be a great opportunity for you and our country. So what have we learned today? First, private investing can mean great opportunities for accredited investors looking to diversify. Next, our infrastructure credit strategy helps companies get projects done, which helps minimize risk for investors. And finally, it can all be available for your portfolio. There are many types of private investments, folks, available here at Trajan Wealth, and our private market opportunities are curated and unique. So check out the links below for more information on private market investing. If you found this helpful or just interesting, give us a like and subscribe for more investment info just like this. And help us know in the comment section what you think. Are you interested in private markets? How would it help your portfolio? Let us know, and we'll see you again soon. Thank you for your time.